What if I told you that one single event just happened that could completely reshape the investment landscape for the next 20 years? No, really, we're talking about a massive shift that's going to hit oil, gold, the US dollar, and yeah, the actual value of the money sitting in your bank account. Okay, let's just start with this number, 303 billion. What is that? That's not a company's market cap. It's barrels of oil. To give you some perspective on just how huge that is, it's more than Saudi Arabia has, it's more than Russia, it's the largest proven oil reserve on the entire planet. And here's the bombshell from the source material we're digging into today. This massive reserve, it just got put under new management. Now, the source alleges that following a U.S. military operation in Venezuela, the country's oil infrastructure has been secured. This is what they're calling the Venezuela Reset. And the argument is this single event kicks off a chain reaction that's going to ripple through every corner of the global markets. But hold on, it's not quite as simple as just turning on a giant tap. See, not all of those 303 billion barrels are easy to get to. First, we've got to understand what makes Venezuelan oil so different and, frankly, so difficult to deal with. The key here is that we're talking about heavy crude oil. This is not that light, sweet crude that you might picture. No, this stuff is thick. It's goopy, almost like tar. And you need very specialized, very expensive equipment to pull it out of the ground and turn it into something useful like gasoline. I love this analogy from the source material because it's just perfect. You know, with some oil, it just gushes out of the ground. Getting Venezuelan oil, though, it's like trying to suck peanut butter through a straw. It takes a ton of effort and a massive amount of money. And that effort is no joke. The infrastructure they have is about a quarter-century old, and it's basically falling apart. We're talking estimates of up to $100 billion just to get it back in working order. The source suggests the U.S. government might even step in and help subsidize American oil companies to get the job done. And this isn't some far-off theory. Things are already moving. An initial transfer of 30 to 50 million barrels is reportedly already happening. Okay, so whenever there's a massive change like this, you know there are going to be clear winners and clear losers. This whole situation basically creates a huge divide in the energy world, and it pits two major players directly against each other. And this slide lays out the core trade thesis perfectly. On one side, you have the big winners, the U.S. oil giants like Chevron, Exxon, and ConocoPhillips. And on the other side, the potential losers, the Canadian oil producers, who the source nicknames the oil moose. So why are the U.S. companies in such a perfect spot? Well, decades ago, the big refineries on the U.S. Gulf Coast were specifically rebuilt to handle this exact kind of heavy crude. Chevron is literally the only major oil company still operating in Venezuela. Exxon has expertise with this stuff all over the world. And on top of all that, it's just way cheaper to put oil on a boat from Venezuela to Texas than it is to pipe it all the way down from Canada. And that creates a massive problem for Canada. You see, Venezuelan heavy crude is a direct, one-for-one replacement for Canadian oil. They are fighting for the exact same customers, those U.S. refineries. All of a sudden, that whole story about a Canadian oil boom coming in the next few years, well, it's got a giant state-backed competitor that's closer to home and cheaper to move. That narrative is now in serious doubt. But look, this story is so much bigger than just which oil stocks to buy or sell. This event is like pouring gasoline on a fire that was already burning. A huge macroeconomic trend that could affect the value of everything you own, the global shift away from the US dollar. So here's the big picture strategy the source lays out. If a government can flood the market with cheaper oil, they can control what's called headline inflation. That's the price you pay at the pump, the stuff people notice. This keeps everyone calm. But while that's happening, the real inflation is quietly happening in asset prices, stocks, real estate, which lets governments inflate away their massive debts without a public outcry. And the data, well, it seems to show this is already happening. Look at this chart. Central banks all over the world started buying gold at a record-breaking pace back in 2022. They've been snapping it up, doubling the average of the last decade because they are actively trying to get out of holding US dollars. By the way, if you're finding this breakdown valuable, do me a quick favor and hit that like button, and make sure you're subscribed to the Stock Market Mojo YouTube channel. It really helps us make more deep dives like this one. The catalyst for this shift was crystal clear. Back in 2022, when the U.S. froze Russia's foreign assets, central bankers all over the world got a massive wake-up call. They suddenly realized, hey, our US dollar reserves could just be taken away. So what's the logical move? You move your money into a physical asset you can actually hold in your own vaults. You buy gold. Now, this de-dollarization trend isn't just a story about gold. Silver is also in the spotlight. It's facing a huge supply crunch at the same time that industrial demand from things like solar panels and AI is just exploding. And this whole situation creates what could be a perfect storm for mining stocks. Think about it. They could get a double boost. Higher prices for the metals they're pulling out of the ground, and lower costs to run their operations thanks to all this cheaper oil. Okay, so we've got a whole new game in the oil market and this de-dollarization trend that's picking up speed. Let's pull all these threads together into a simple, actionable playbook based on everything we've just talked about. All right, here's how the source material breaks this down. Step 1, the U.S. oil majors, the companies set to directly benefit. Step 2, accumulate precious metals like gold and silver as your long-term insurance policy. Step 3, look into mining stocks as a way to get more leverage on that trend. Step 4, take a hard look at any Canadian oil exposure you have. And finally, Step 5, start looking for companies in areas like manufacturing or shipping that win when their energy costs go down. And this is super important, you've got to have a realistic timeline. This is not a get-rich-quick trade. That first transfer of oil, it's not going to move the needle globally. The next year, maybe year and a half, is really a wait-and-see period. The real impact is going to play out over the next 2 to 5 years as the rebuilding happens and production really starts to ramp up. The long-term effects will cement themselves after that. And all of this leads to one pretty stark takeaway from the source material. In a world where governments are trying to quietly inflate away their debts, the people who own assets, things like stocks, real estate, commodities, they're the ones who come out ahead. The people who just hold cash or live paycheck to paycheck, they just watch their buying power get slowly eaten away. For more deep dives like this one that help you navigate what's really going on in the markets, make sure you subscribe to the Stock Market Mojo YouTube channel. So that leaves us with one final, really critical question. This isn't just about one trade. It's about understanding the deep currents that are moving the entire global economy. In this new world of inflating assets and devaluing cash, the question you have to ask yourself is, are you positioned on the